Hello and welcome to another episode of the ICC Academy Livecast. My name is Thomas Paris and I'm joined today with Qamar Saleem from the IFC. So maybe we could start off this conversation first by explaining a little bit about what the International Finance Center is and your role within it, as well as the group's activities regarding the SME finance portion.
Great. So firstly, International Finance Corporation is part of the World Bank Group. It's the private sector arm of the World Bank dedicated to private sector development. And within Financial Institutions Group, our target is the financial institutions that we provide advisory and investment solutions to. And I'm part of the, as I mentioned, Financial Institutions Group, which, has a large investment area, which is, just to give you an example, we in 2017, the financial institutions that we partner with provided nearly $365 billion of financing to 8.3 million SMEs globally. And when I talk about the advisory business, we have close to 38 ongoing engagements in 27 countries, where funds under management are around $200 million. So we have a large investment and advisory proposition for financial institutions, and that's the core of our group that we do. So that's briefly on what we do.
Great. So if we take a step back, for those who may be not 100% familiar with what SME finance entails, how would you describe it in a few words, SME finance in today's ecosystem?
See, SME finance, as the term entails, is commonly understood as the access to finance for small to medium enterprises. Now, it comes in many shapes and forms. It comes through financial institutions. It comes through friends and family. It comes through capital markets. It comes through, non-banking financial institutions. So there are many channels. There are crowdfunding. There are fintechs. So there are many sources through which the finance funnels through to the small to medium enterprises. And if you enlarge the definition a bit further, we also call it MSME, which is micro, small, and medium enterprises, because these are distinct segments, within the SME space. And where I think the market failure is the most is the very small enterprise space, just above micro, below small enterprise. But overall, if I look at the SME finance space, it's nearly a $12 trillion market. And that's the size of the market it is. And it's more than 10% of the global economy. So I think that's what we need to focus on. And out of the 12 trillion, let me break it down for you. The available finance that goes to the SMEs right now is close to $3.7 trillion. But when we look at the unmet demand, the demand that is there and not being provided by financial institutions, that's around $5.2 trillion. And if we add to that $2.7 trillion that are needed by the informal sector. So you can see that, it's a $12 trillion market, largely undertapped. And that's what the industry understands as SME finance. But I would maybe end on a note by saying that the industry needs to understand it more broadly, because SME finance is not just about lending and giving finance, because SMEs have more needs. They have transactional need. They have, multiple needs that should actually fall under the SME finance. So I would typically call it SME banking than SME finance.
Okay. And what do you think has been the catalyst for these new forms of SME finance in the last few years? You mentioned, peer-to-peer crowdfunding, fintechs. Has the technology really been the backbone? The democratization of technology and different kinds of software, or is it just a different kind of cultural shift in the way that we take a look at SME finance?
I don't think it has made the level of impact it can. I think at this stage, the way I see it, the fintech, if I look at the fintech, global fintech, volume of lending that goes through the fintechs, it's close to $300 billion. Now, you'll say, well, that's a large amount, but if I really break it down, the $300 billion, it's heavily regional based. So 52% is in Asia and another 38 is in the Americas. So that leaves you with 10 odd percent. And out of that 10, 8 is in Europe. So that leaves with the rest of the world with 2%. So I think one thing I'd like to highlight, a lot of fintech lending is very regionalized and it needs to become more global. But when we break it down into the SME finance, not more than 5 to 7% of this 300 billion actually goes to the MSME finance space. So I've covered the fintech in more detail because I feel that's the biggest trend that is, facing us. So I'm not discounting that this is not something that is going to change, the dynamics going forward. I think there is big potential for fintechs to play a role. And that's one of the things I do advocate to the fintech community, that they need to look at that SME finance opportunity beyond their conventional, because the typical fintechs are targeting traditional products of different banks. So, but moving beyond, I think there are many other trends that are coming. The digitization, the trade digitization is another element that is coming very strongly. So a more promising trend I see is in the supply chain finance technology, because the platforms in that space have really mushroomed, and the industry has embraced them, very well. And we are seeing examples around the world where fintech and supply chain technology platforms are coming into play. We see distributed ledger and blockchain-based supply chain solutions coming into play. So I would say the trade is a big area. Within that, digitization of trade, within that, supply chain finance, is another space. P2P lending, crowdfunding is definitely coming up. It's not reached the scale that it can. Right. So it's a new trend, but certainly something to watch. But I think more importantly, I am seeing a lot of interest from the regulators, from the ecosystem, to really nurture the SME finance. And as we know, between 75 to 90% of the new jobs are created by the SMEs. So it's all the more reasons for the governments and the regulators to squarely focus on building this, because it not only has economic contribution, it has employment and job generation contribution for them.
Very interesting. So, and with all of these new types of technologies and ways of financing, I think it comes with its own set of baggage. In your opinion, what do you think are the regulatory or compliance challenges that we face with SME finance as we shift to this more digitized trade ecosystem?
Yeah. I think digital and fintech is definitely one space where regulation does play a role. But I would like to expand it a bit further, because this is still a smallish space in terms of regulators. So regulators are beginning to understand. Let me talk about, for example, supply chain is an area that I mentioned earlier. So we are working with many regulators around the world in educating them on what are the supply chain finance methodologies, what are the rules, regulation, risk governance, as well as compliance and other aspects, accounting treatments needed for a supply chain offering. So there is definitely that angle. The other is the fintechs are not really regulated by the central banks in most of the countries. So that does open a space where in my view, a lot of fintechs' credit models have still not been tested. So this could potentially be a minefield for many, many countries if it's not well understood, especially when you go into the higher risk segments, more complex segments like SME banking. So the regulators do need to understand that. Then, for example, data warehousing or data, where do you park the data? So from that standpoint, a lot of countries don't allow data to be housed in cloud, so it needs to be on-premise. So that has different regulatory implications. So as far as technology is concerned, I think the regulation is still evolving. I don't think this has been well understood. There are new regulations coming in, like PSD2, and some of the European institutions have developed new regulations for fintech lending, but it's still evolving. And I was at a conference last week in Bahrain, a fintech forum, and the industry is fast adopting some of the new, and one of the things that, a lot of regulators, we have 5 central banks there, and they felt that they would rather replicate rather than reinvent. So from that perspective, I think fintech is a new space, and I do encourage regulators to understand before, we unleash the whole segment. But apart from that, there are regulations needed for example, for information sharing and credit bureaus. We need credit bureaus to be instituted in many countries, and we work in many countries to create that mechanism. Collateral registries. A lot of banks want to lend them based on land, building, fixed assets, whereas that's an asset they least possess. But the asset they most possess are working capital assets, which are receivables, inventory, purchase orders. And the industry doesn't look at that. So the working capital finance space is again a big area where the industry needs to go and make mechanisms available. The regulators need to make mechanisms available so that we can do more working capital finance as financial institutions. Newer areas like capital markets are developing. Some countries have started capital markets, SME specific stock markets, India, UK, Malaysia, Korea. There are many examples. It's been met with, I would say, mixed success. It's not reached the scale it can, but that's another area where regulation needs to step in. Then another area is country level regulations, where countries need to have a country level, like Malaysia has SME Corporation, for example. That is a body that brings all the SME universe together. So there needs to be country level regulations as well. So the multiple areas I feel regulators play a role. For example, in doing business, in business registrations, informality is a big issue global. So how do you make it easier for businesses to register, and how do you give some tax incentives so that they are welcome into the formal space? Because one of the biggest issues is that about taxes, and how the transparency creates more issues for them. So that's another space, the tax regime, that needs to be looked at. So I do believe regulators have a big role to play. For example, credit guarantee schemes is another space where governments are stepping in, and some have formed privately owned, some have formed, like Lebanon is more bank owned. You go to Jordan, it's more, country owned. So I think the different examples of how credit guarantee institutions around the world, and that's a promising trend actually. I see more demand for credit guarantee mechanisms, risk mitigation mechanisms in country. And so these are some of the ideas that top of my head I feel are some of the regulatory enablers needed.
Great. So, painting this as a minefield is pretty appropriate given everything that we've covered. And of this list, which one do you think, from a regulatory perspective, which one do you think is going to be the biggest hurdle for SMEs or anybody involved in SME finance for it to reach its full potential? You're saying, in a best case scenario, what would need to happen, do you think? At least the top one that you think might be the biggest sticking point.
From a regulator standpoint?
Yes, yeah, exactly.
I think information asymmetry is a big issue. So having data sources where you can tap into information on MSMEs, alternate data sources, credit bureaus. So I do think, why the industry doesn't go into that, because we don't know enough, I think, when you talk to the financial sector. So I think that is one space. So having bureaus, positive and negative, are very important to nurture this, and information sources for alternate data. Secondly, as I mentioned earlier, the collateral registries is another area that the financial institutions need to have faith that if they are lending against hypothecation or assignment of receivables, that they can eventually enforce it. If they don't have faith that this can be enforced and they will get the right priority, they will not treat it as an asset class that has the right, and hence the LGDs of the exposures will be not properly mitigated. So I think we need to look at the second area is really around collateral registers, and linked to that is electronic invoicing. I think we live in the new era of digitization, so we cannot just rely on paper invoicing at this point in time. So many countries are adopting electronic invoicing mechanisms, and I think that's another enabler. If we put it to play, can unleash a big segment. We feel SME finance tied up in supply chains is close to $1 trillion. So if you want to tap that segment, I think you need to enable some of these. And I think one other enabler is the credit guarantee schemes. I think this can potentially give a lot of stimulus to SME finance.
Okay. Well, I think a parallel question to that is something you touched on earlier, which, around the percentage of the global GDP that the SMEs represent, especially in the emerging markets. What do you think needs to be done? And I guess it could be a similar answer, but what do you think needs to be done on a regional level, different regions, different priorities, to successfully incubate these MSMEs properly? I'm sure that there might be differences according to whether it's cultural and also just the demand what the SMEs need in different parts of the world. What do you think about this?
Each region has its own set of dynamics. But I would say MSME space largely globally is not well tapped. So while there are issues that are different in each region, but at the same time, the finance gap that we see globally is not hugely different, across the regions. But having said that, I think the regions where we see more developed markets have, I think, gone to different heights in terms of providing SME finance. For example, the Europe and the US and the Latin America, I think they're a bit more advanced and what they are able to provide to the market to enable SME finance. But when you talk to these markets, the SME definition in these markets is like the large corporate definition in emerging markets. So I do think when we look at SME, we need to look at it in the context of the country. And that's why I'm not a fan of one single definition across the world. Right. I think every country will have a different definition of an SME. So I think, to answer your question, I think every region will have different categorization of SMEs in different countries. So when you come to Africa, I think the challenges are different because challenges around inclusion and are interestingly, you'll be the age 15 plus population that has a mobile money account in Africa is the highest in the world. It's 15%, followed by MENA, which is 6%, and the rest of the regions are somewhere below that. So as you see that, in Africa, while we do see that, there is more challenges for SME finance, but at the same time, the inclusion is being, steered by the digital era that is coming in by the telcos supporting the inclusion initiative. So we do feel that in Africa, our focus as IFC right now, we really would like to focus on Africa and South Asia. I think these are the two markets where we feel the impact is the most for SME finance initiatives. And the other markets like East Asia and some of the other markets are relatively more developed. But again, I don't think the SME finance problem has been solved in any of the markets at this point in time.
And do you think access to mobile phones has been the biggest catalyst for change in these areas that you mentioned, Africa and MENA, for IFC, when it comes to SME finance?
Yeah, I think it's become a key stimulus, I must say. And it is driving, it's much easier once you have data of telephone usage or you include an SME through a mobile money account or, that enables you to have sources of information that you never had before. So I think from that standpoint, yes, I think Africa and Asia, we are seeing embracing this much faster than the rest of the world. And I do feel that our strategy is to stimulate this even further. And that's why digital and really mobilizing digital for SME finance is a key priority for us.
And how do you perceive or expect the development and the effect of blockchain in this realm?
See, blockchain is a highly debated topic, and there are many fans and many enemies of blockchain. But where I see more promise on blockchain is, as I mentioned earlier, in the supply chain finance space. I do feel there is a market and there's potential for the distributed ledger technology. And there are platforms coming up which are distributed ledger technology based. So I see much more promise as far as supply chain finance space is concerned for blockchain. And of course, I think there are many proponents that this can do more than that. But this battle has still not been won. So I do think the industry needs to evolve. It's at nascent stages, but I'm already seeing a huge uplift as far as the supply chain space is concerned. And I do feel that's a space where I think this has most promise as far as SME finance is concerned.
Okay. And do you think that's going to be the biggest shift for supply chain finance? Is going to be the access to this distributed ledger, whether it's blockchain or through a similar technology?
Yeah, I think that's what's disrupted the supply chain industry in the last 5 years. If you look at supply chain industry, it was a small industry. It's barely reached about $500 billion right now. It's going to $2 trillion. And this is excluding some of the emerging market domestic supply chains, which is maybe another $1 trillion. So I think we are really looking at this industry growing at a very rapid pace. Nearly 40% is the average growth rate in this industry right now. So we do feel that in the next few years, a lot of new change that is happening is enabled through technology. And these technology players that have come into play, there are close to 400 supply chain finance technology providers around the world, and they're one is born every week. So that's the pace of technology that is coming in. And linked to that is, the back end of the technology. Do you have a distributed ledger technology? Do you have? So there are many ways in which you can enable. But yes, I think I would not single out blockchain. I'll say the whole technology space that is opening up in supply chain is possibly been one of the biggest, and the digitization of trade are biggest disruptors in this space.
And with all of these new technologies and methods of doing business starting to bloom over the next few years, what do you think is the impact, or the necessity rather, for education for SMEs, but also anybody involved, not just the SMEs themselves? It could also be on the banking side. It could also be on the logistics. What part do you think education is going to be playing a role in making sure that these things are used effectively, and also maybe even acts as you mentioned, as a stimulus for even faster growth?
So when you talk about SMEs, they need three things clearly. And we've extensively talked about finance, access to finance. But there are two more things that are very important. One is access to networks, and that's where the supply chain and the e-commerce and the ecosystem comes in. So they do need access to networks, and they need access to knowledge. And you'll be surprised to know that many interesting practices mushrooming globally right now, and non-financial services, as we call it, is one big area where we are seeing actually financial institutions wanting to play a role in advising SMEs on how they should best run their business, not just in terms of putting up the right proposal to a bank, but also in terms of their business management. So, for example, TAP Bank in Turkey, which has launched a very specific offering on non-financial services. Then there are, so I do feel that education, access to education is something that should be a responsibility not only of, the NGOs and, the government bodies. I think the SMEs need to be educated by the financial institutions. They need to be even educated by the rail sector, corporations who manage supply chains within their ecosystem. So they need to educate them on how to build their standards, how to build compliance standards and stuff like that. So they have a role to play. Banks have a role to play. So the entire industry. So to answer your question, education is quite frankly one of the most important things that needs to be focused upon, which historically was being seen as more of a social service. And if you talk to some of the banks that have launched the non-financial services, they see it as a business case. They feel that the performance of the SMEs improves, so hence their own profitability improves.
Right.
Secondly, the risk that inherent in the SME business improves because they are doing their business better, so their loan losses are lower in that segment once they educate the SMEs. So the education bit, we within IFC we have a specific practice for non-financial services, and we do advise banks and the key stakeholders on how to build the right ecosystem. And there are many interesting trends, mushrooming around the world. For example, inclusion for women entrepreneurs. It's a big area, and the need for education is even more there. Many of these businesses, as we see in many geographies, are home-based businesses. So their ability to run and grow those businesses, and when we compare the portfolio performance from our client data, the performance of the portfolios where they lend out to women entrepreneurs is actually better than the average portfolio. So that's another space I feel that needs to be looked at. Climate is another area where we SME finance. When we looked at the supply chains, sustainability in the supply chains is very important. So again, they need education on how to create the right standards. So and many of the businesses actually fail, as you say 90% of the businesses don't succeed, but it's not purely because they don't get funding. It's just that most of them don't know how to manage their business, and some of them don't know how to transition their business from a startup to more of a running business, and then growing into country level business.
Right.
So to answer, a long answer to your short question, I do feel this is something that is starting to gain momentum, but it needs much more focus.
Okay. No, I think it's good to be able to get this sort of context. And I guess one final question I have, which is sort of come to me through the discussions. What makes you the most optimistic? Relating to SME finance, whether it's access to new technologies, whether it's shifting trends in the industry, whether it's a societal shift. But what makes you the most optimistic for the next few years?
So I think 3-4 things.
Yeah.
One, I do feel that the regulators and the industry, the key stakeholders in the country, have realized that this is a stimulus that is needed for economic boost as well as job creation. And job creation is one of the biggest challenge we have right now in many of the emerging markets. So I think this point has come home in many different ways in many regions. So I do feel that there is a buy-in from the industry, especially the regulators and the key stakeholders. So that is one that makes me optimistic. Secondly, the financial institutions have realized that they don't have many sources of revenue growth, because corporate banking and the retail banking and the conventional businesses that they do are relatively saturated. There's only so much you can do in that space. So the marginal advantage of doing more is, less than going to new blue oceans like SME finance. So we do see financial institutions waking up to this opportunity. So that's another promising trend. And we're working with many financial institutions, and they're very keen on finding new sources of revenue, and SME finance is an obvious one. And I would say SME banking, because quite frankly, I've run SME banking in my life as a banker as well. And the best way to split your revenue in an SME banking is a 3-way split. You make 1/3 money from lending, 1/3 money from deposits, and 1/3 money from transactional banking. And that's the plot a lot of banks miss. So I do feel that a lot of banks have started to see that it's not just about finance. It's actually about driving non-lending income growth. And many of I was with a financial institution between 2008 and 12, and that was possibly the worst time in the financial industry in the recent past. But we were able to grow our SME revenues every year by 40 to 50% purely on the back of liability and transactional revenue. So I think the industry has also realized that it's not just booking risky assets. And if you personally ask me, I don't think SME banking is per se a risky segment. I think it's a segment you need to fully understand, and which I don't feel a lot of financial institutions pay heed to that. I mean, in some of the financial institutions we go to, they will set up a 2 or 3 member unit and they'll say, okay, run an SME. This is like corporate banking is a business line, retail banking is a business line, SME banking is a business line. And if you go to some of the banks in Turkey, for example, Guarantee Bank, I mean, they have a specific division reporting into the CEO as a different vertical of a business. So to summarize, I think the financial sector has realized that there is potential in the segment and there is growth opportunities that have not been tapped. So that's the second promising trend. Then, of course, the third key trend that we are seeing is the disruption through technology. That is happening in many ways. The fintechs, the crowdfunding, the distributed ledger, then artificial intelligence, machine learning. There's so many new trends that are coming that will enable this space, because this space was almost like an invisible economy. Right. Now, all of a sudden, you're starting to have visibility through different ways and means. And that's where I believe a lot of new technologies and new ways and means are going to enable you. For example, just having a mobile money account creates a degree of formality that was not there before. So I do feel there are new ways and methodologies coming into play that will enable SME finance. And lastly, I do feel there's a huge amount of regionalization and domestic, domiciliation happening in many countries. So while it's a global trade is, a big growth area, but there is a huge trade that lies in between. So the whole trade finance space and the digitization even in the trade finance space is also going to enable SMEs to have, access to finance. And of course, I'll conclude by saying the regulatory regimes have also started to take note of what needs to change from a regulation standpoint, which we have extensively spoken about earlier. So that's the other thing. So I am quite optimistic. This is a problem that has not been solved, but given the extent of the problem, it needs to be solved.
Great. Well, I think that's a perfect note to end on. Thank you again. Thanks for making the time. And thank you also for joining us for the Supply Chain Finance Summit in Singapore. And we hope to have you again soon.
Thank you for having me. It was a pleasure.
Thank you.